Hello traders and welcome in a new weekly analysis webinar. This is Mohammed Yaout and I'm the Chief Markets Analyst at PU Prime. Today is the 22nd of July 2024. We have had very expected yet highly influential news yesterday with Joe Biden dropping out of the presidential race. So things are turning around in the markets at the moment. We're seeing some, profit taking on the US indices. The Trump trade might be on hold at the moment. So we would like to discuss what that means on the markets. What are we expecting on the US dollar and the other, of course, top or the major currencies? What do we have on it? And what do we have on the, it says 15th of July on my screen. That's right. But today is the 22nd. Let me edit that real quick, and thank you for noticing, by the way. Now I think it says Monday the 22nd of July, so yes, it needs an edit. Okay, so today is the 22nd of July and we'll have a discussion about the markets. What do we expect and what do we have on the economic agenda, as well as the technical analysis? Please get your questions ready. If you have anything that you would like us or me specifically to discuss during today's webinar, I'll definitely do that by the end. So yeah, today, having a look on the economic agenda for today, we have pretty much nothing. Okay, we only had the interest rate decision or the loan primary decision from the Bank of China, People's Bank of China, and basically not all of the markets or not everyone around the world basically trades with the yuan or the Chinese yuan. So it's not so much important to look at. Guys, I'm a little bit getting distracted at the moment because of your chat and your comments. I'll just leave it for now. If you have any questions, please leave it and I'll have a look by the end of the session. Okay, starting with the economic agenda for tomorrow, which is Tuesday the 23rd of July, we will be having some things that we need to look at, which is the ECB's speech by Lane. So as we said during the previous week and maybe the previous last 2-3 weeks, we are pretty much very focused on the speeches by the central bank governors or members of the central banks, because they basically want to know what will happen during the next meetings, or we do want to know. So on the 31st of July, we will be having an interest rate decision by the Federal Reserve, and most often, or most probably, they will leave it on hold. Okay. However, the comments really makes a difference, because what do they think or how do they perceive data coming out from the US economy? Everything is pretty clear from their comments. And as well as we also follow the comments from the FOMC, we also as well follow the comments from the ECB, the European Central Bank. So we have Lane speech starting tomorrow, or scheduled to be tomorrow, the Tuesday. We have the continuation of the Eurogroup meetings, not really that important, and we have the existing home sales. It's really important to watch that because it is a key indicator of the housing market, which is pretty much very important for the GDP, the overall GDP in the US economy. So this is something that we will definitely have to follow during today's trading day. Moving forward to Wednesday. So far, nothing. Okay, we have ECB's Dick Windows, another speech from the ECB. So Tuesday and Wednesday we'll be having speeches from the ECB. We have the PMI from the Eurozone, the manufacturing, the services, and the composite. That's something that we definitely should follow. We also have the PMI from the British economy, the manufacturing, the services, and the composite as well. So it's really important. We have another speech by Lane. So yes, one of the key things that we need to look at or to follow during this week probably is speeches from central banks, and of course I mean the ECB or the European Central Bank. Okay, so we have the building permits and nothing more. I think, the PMI from the US economy. So that's really important, really important. The manufacturing, the services, and the composite. So the PMI numbers will be announced on Wednesday. We have from the Eurozone, we have from the British economy, and from the US economy as well. This is something that we definitely should follow and definitely should expect high volatility before and after the news. We also have the interest rate decision by the Bank of England, expected to cut interest rates for the second time, because Bank of England already did cut their interest rates during the last meeting, and another cut is expected during this week's meeting. So far, Wednesday is the most important day of this week. We have the regular inventories data coming out from the US, and that's it. So Wednesday. On Monday, we have nothing to look at. So it's just simple technical analysis trading. On Tuesday, we have some minor importance on the home sales from the US economy. And moving forward on Wednesday, it's so far the big day. So we have the PMI from the US economy, the British economy, and the Eurozone. And we also have the interest rate decision by the Bank of Canada. Definitely something that we should look at. Okay. On Thursday, we have the GDP, definitely something that caught my eyes. We have the core PCE. Okay, that's a good week. That's an important week. Okay, so on Thursday, we have the US GDP. We have a speech by ECB President Christine Lagarde. We have the durable goods orders. So another important day that we are expecting on Thursday. It's really important. It isn't as important to me as Wednesday. I mean, the PMI numbers have more influence at the moment on the markets than the GDP and the durable goods orders, but it's still important. So Thursday is really important. Moving on to Friday, it's the most important day. Why is that? We have inflation, we have the PCE and the core PCE from the US economy. This is what shapes the movements for the US dollar, definitely affects all of the top major currencies and gold. So if we are gonna rank this day on importance, scale, Friday is definitely number one. That's the most important day, and that's when we expect most of the volatility on the weekly candle to take place. That's on Friday because we have the PCE, and then maybe Wednesday we have the PMI. It's the second on importance. Thursday we have the GDP. That's the top for me on the dollar numbers. What are the expectations on the PCE? Okay, for the core PCE price index, so far we don't have an expectation. The previous number was 2.6, and the PCE as well, we don't have an expectation. So far, no surveys, no expectations. My personal expectation is PCE will continue to edge lower. So let's wait and see. Let's see how this will affect the markets. That's the first thing, which is the economic agenda. The second thing is what happened yesterday with Biden announcing his dropping out of the presidential race. This was very, very expected. It was just a matter of timing, because not only he's really old for this job or to run for another term, even the Democratic Party leaders, they are not so happy with his performance during the first presidential debate, which was as well the last. So he stumbled in a lot of points. He was not able basically to promise the voters that we will have a brighter future or anything. So yeah, overall they were not happy. They pressurized him to dropping out of this race, and it was just a matter of time. So what happens after Joe Biden dropped out of this presidential election or race? Nothing so far. Nothing. We will just be having some expectations of who will be, following Joe Biden for this presidential race. So far, everyone is in favor of Kamala Harris. She's the current vice president, and most probably she will be the one to win, the Democratic nomination at the convention, next month. The point is they will not fully or officially announce who will be running after Joe Biden unless they convene. I mean, the Democratic Party, the convention will be from the 19th till the 22nd of August. So we literally have 1 month right now of uncertainty. We have Donald Trump. He's already starting his, presidential campaign. He's every day in one state or another. So he's trying to gain the confidence of the American voters. However, on the other side, the Democratic Party, so far, they don't really have someone officially, to stand for this presidential election or race. So this will happen basically in August from the 19th till the 22nd. This is the National Convention of the Democratic Party. They will announce who will be running as the official nominee from the Democratic Party. But from now till the 22nd of August, we will be just having pure expectations, pure probabilities, surveys, and so on. But it will not be official until the 22nd of August. I personally feel that they will be choosing Kamala Harris. He already, Joe Biden, nominated her instead of him, but it's not official. It's not 100%. They can have another nominee, in the general convention. So that's for the technical or the economic and fundamental topics that we need to discuss here. I don't really believe currently that the election thing will have much weight on the markets because, as I said, we will not be having any major news coming soon on who will be running the election instead of Joe Biden. So we might see, and we're currently seeing, where are the equities? We had this downward move on the Dow Jones. We have another downward move on S&P after, reaching all-time highs because the stock markets, they do love Donald Trump. So during the past week, when markets were almost certain that Donald Trump, especially after his assassination attempt, markets were in favor, of Donald Trump is really close to win the next election and so on. However, when Joe Biden dropped out of the race, we don't know what will follow. So far, equity traders are trying to take out some profits at the moment. And we will see, maybe we will have someone who will be a good opponent to Donald Trump. Only then the equities will continue to move lower. If favors are still on, higher, that Donald Trump will be the one closer to win, I mean equities, because they do love Donald Trump, will continue to move higher. If you can remember, during the previous presidential term, he always said that the stock market is near all-time highs and so on. So he bragged about this a lot, and that's why the sentiment in Wall Street is more leaning towards a Donald Trump victory. They want him, and any chances or any expectations or probabilities that Donald Trump will be the closer one to win basically boosts the US equities higher. But in the time being, what we do have here is technical analysis. That's what we can have at the moment, and that's how we can trade it. Okay, let me have a quick look on the comments here. Can you have a look at Euro USD? I'm short on a daily time frame. Okay, I will definitely have a look on it. صباح الخير, صباح النور, Sharif, hello. Thank you, sir. By the way, it's a good quality video and audio on this live. Thank you very much. Good day, good to be here. Please look at gold analysis for the week, of course. So there are some things that we definitely should look at, which is the dollar, the euro, gold, oil, and Dow Jones. Okay, let's start by having a weekly analysis, and this is on the dollar index. What happened during the previous week was previously bullish, was obviously bullish. We had the support here, which is the 104.30 roughly. And the dollar index tried to break below once, twice, even previous week we failed to close to close below. It was really close that we actually have a break. However, it was just a test down to 103, but the weekly candle overall closed bullish and still higher or above support. Okay, it gives me a slight bullish analysis, on the weekly time frame. The previous week was bullish, just around support. All of those candles, the previous wicks are all forms of support. So to me, this weekly candle around support is bullish. Oh, you speak Arabic, so nice. Yeah, thank you. I'm from Egypt, basically, so it's my mother language. Okay, so the dollar index on the weekly time frame, it gives me a bullish bias so far. Okay, on the daily, pretty much the same. That support we rejected, tried to close below. However, we are currently trading higher. So again, bullish bias. On the shorter time frame, which is the 8-hour time frame, I think we are still bullish, but with some conditions, because you can see here what's happening is we were moving lower with very good momentum. Here we started to lose momentum a little bit, and that's why you can see here that we are starting to form some bullish momentum or bullish divergence on the momentum indicators. So I don't really believe that the dollar index will continue lower this week. I mean, that was a clear false break of this support here. So that was a support, and that's definitely 104, exactly 104. Okay, that's support once, twice. During the previous week, a clear false break. We are trading higher. I think that the dollar will be edging higher this week. Of course, it will be data dependent. We will be waiting for the PMI results. We will also be, every day during this week, we have some data from the US economy. Tomorrow, we will be having the retail sales. Tomorrow is Tuesday. Wednesday or Thursday, I think we have the GDP. We have the durable goods. We have the PCE or inflation. So every day we'll have to look at the numbers and assess what will be or how it will be affecting the US dollar. However, on a technical analysis, purely market structure, I think that this was a clear break, false break below the 104 levels. As long as we are trading, above those levels again, I think I'm bullish. However, I will want to see a break above the 104.50, 104, let's say 45, okay? Because, yeah, we are moving lower. This is slightly lower than the previous one. There is some bullish, momentum here building slowly. However, it's not a good opportunity to buy right now because we can still go lower before going higher. So my entry to buy the dollar during the week will be basically a close above the 104.45. Okay, that's my entry level. On the other side, if anything happens, we have the other scenario play around, which is a close below the 103.65. If prices went down and broke, we'll definitely shift, the technical scenario. So I'm more biased to buying. However, if we have, a break below the 103.65, I don't really think that might happen. But, still everything is possible in the markets. So just to wrap up the dollar index, I'm waiting for a close above the 104.45 for a good entry to buy during the week. Okay, that's about the dollar index. And let's have a look on the euro. So Friday, it's the important day. Yes, it's definitely the important day to watch the inflation numbers. Okay, someone asked me about the euro, but I'm not able to remember what he said, which is good because, you know, when you guys ask me, I'm short, I'm long, sometimes I'm biased a little bit, you know, to be in your favor. I mean, if you told me I'm short, when I open the chart, sometimes I'm, you know, I'm looking for reasons not to tell you that you're gonna lose your trade. So I'm not able to remember what he has on his trading account, whether a short or a long position. However, let me give you my honest opinion on the euro versus the dollar. Moving lower. Okay, it's definitely bullish, is it? So we were moving lower like this. That's a higher low. That's a slightly higher high. But the previous week is bearish. The previous week is a great bearish candle. So we might be heading lower for a retest. Okay. That's the level I'll be looking at. Pretty much this is just, you know, the beginning, or it's only the weekly time frame. How about the daily? I think there is a level of interest here. It's basically slightly bullish on the higher time frame, on the weekly and on the daily, because we broke above this level, the previous, you know, high. We also broke above this downward trend if you do work with downward trends. However, the good thing is it's too late to buy right now, okay? Because it's been already, you know, trending higher for almost 270 pips. What I would do is I will wait for this upward move to retrace a little bit. Just wait. Remove this. Okay. So the previous week was a great upward move. I will wait for the euro to retrace a little bit, maybe to the levels of 1.0840 or to 1.0807. I think this is, you know, a level of interest. We might come back to this level before continuing the move higher. Okay. Maybe there is still a chance that we will be breaking lower, and this will be, you know, like a false breakout. It's still a possible scenario that this might be a false breakout. I don't really believe this. However, either way, I'm slightly bearish on the euro during, you know, this week for a retracement, maybe of around 70 points. From here, after having some bullish price action, I might think to buy and continue, you know, targeting this highest high on the one day or the daily time frame. Okay. So it's a little bit challenging the year because we have had a great, you know, break higher, and we stopped around this resistance. So we broke resistance, which is this one, but this resistance stopped the move. So we are heading for a retracement and a push higher to break even this one. This would require, yeah, I think it's good with my analysis on the dollar index, because on the dollar, I still believe during the week that, as we said, I'll be waiting for a break above the 104.45 to buy. But eventually, because they will be cutting interest rates, the dollar will continue moving lower. So I don't really mean that I'm really bullish on the long term on the dollar. No, it's just I will be thinking to buy the dollar during this week. This upward move that I'm expecting on the dollar will give this retracement that I'm expecting on the euro lower, and then we can just buy the euro. Who's asking about the euro? Can you have a look at euro dollar. I'm short on a daily time frame. Yeah, might be good depending on where your target is and where your stop loss is. If I were you, I will definitely have my stops placed above, you know, this high. Yeah, so I would say, I don't really know where your entry is, but I would really assume after this great engulfing candlestick you went bearish, so your stops would be around here. And yeah, maybe yeah, the first target, which is the 38.20% on Fibonacci, will give you a rough, you know, one-to-one risk to reward. Would be good. Maybe at around this level you can just, you know, move your stops to break even and go for this second target. So yeah, this is just how you can manage your position, my personal opinion. I think we have a question. What about gold, sir? We will definitely check gold. Okay, let's have a look on gold. Absolutely false breakout. You know, so the previous week candlestick, it just, you know, completely broke above the previous highs, and we even reached the levels of $24.80 per ounce. However, we moved back lower and we had this great bearish candlestick as the weekly close. So during the week, I think I'll be bearish. Not only this week, maybe this week I'll be bearish on gold, because the previous 2 weeks or 3 weeks were bullish. This was one slightly bullish. This one was a great bullish candle. This one was another bullish candle. And I think the previous week candlestick will start some retracement lower. So if we're going to retrace part of this upward move, yeah, I think the first target we will have will be 23.80 or 23.85. Okay, let's move on to the lower time frames. The lower time frame shows another, you know, or a clear false breakout here. I used to trade with a sideways range strategy. It was good, but it always said that if we have a sideways range and we have a false breakout, that most probably prices will go back to support or to the other side. It's not 100%, it's not the holy grail of trading. However, I mean, technically, we have some bearish expectations on gold. 3 days of downward moves. My entry for short euro dollar. Let me get back to the euro dollar after I'm done with gold. Okay, it's bearish. There's nothing I can say, but not here. I mean, if you didn't sell gold, it's too late to sell. The 8-hour time frame, I think the 4-hour time frame will start to show some support around here. So yeah, we are definitely looking for an upward move to continue the move lower. There is pretty much an easy analysis here. I think we might go higher a little bit during the day. We're currently trading around 2400, maybe 2430 is a target we might see today, before continuing lower, breaking Friday's low and continuing the move lower. Okay. $1.0905. Okay, so you shorted on the way down. Where was the daily time frame? You shorted on the way down during this candlestick, which is great. TP is 1.0860. Oh, that's an early take profit. It's good, but I think, does it give you good risk to reward? Your target is 1.0860. Okay, so you're aiming for 45 pips. Yeah, you didn't write the stop loss. Hopefully you do have a stop loss. But I think it's not the best thing because, you know, the stop loss, yeah, it's a rough one-to-one. It's a rough one-to-one. If you have your stops placed above the high, so it's around 47 pips of risk versus 46 pips of profit. Yeah, fairly good enough. Or yeah, it can do well. Can we still sell euro dollar now? No. I want to get in. No, don't get in. We never chase prices. Prices have been moving lower. What you can do, okay, this is the 1 hour time frame. During Thursday, Asia, Europe, US markets sold euro. During Friday, it's somehow consolidated. So on the euro, there is definitely a retracement happening today. So guys, gold, as we said, will move up a little bit before moving down. I think the euro will do the same. So if you want to sell the euro, this might be a good supply zone on the 1 hour time frame. You know, it's a base or the base drop, 50% Fibonacci. So if the euro moved higher during the day to 1.0910, which is slightly above our friend's, you know, Dean entry, it might come back to break even, but I think you will be good, you know, to move lower again. This might be somehow how to play out with the euro. According to the price action, of course, you will set your profits, your stop loss, which is really important. Guys, please never trade without stop loss. Never do it. Is it a downward trend on gold? It's not yet a downward trend. It's, you know, starting, you know, to move lower after a great upward move. So according to the price action moving forward, we will see, is it only a retracement or a reversal? I mean, after this great upward move, it's normal to be moving lower. We might even move lower to the equilibrium 2360, and then we can see if we move higher. So this will just be a retracement, not a downward trend, or we move lower, you know, and it's officially a downward trend. It also depends on which time frame and which context you are looking at. So yeah, that's on gold. What's happening on the US oil here? We are still bearish on the US oil. Definitely, you know, a symmetrical triangle here. The previous week was definitely another bearish one. So yeah, it's pretty much easy. You know, guys, one of the, in my opinion, of course I might be wrong, but one of the best instruments to trade as per the technical analysis is US oil, because, you know, look at what happened. It touched the lower limit of this symmetrical triangle on the weekly time frame. We had 4 clean candles of profits, 1, 2, 3, 4, just textbook, you know, upward move. We touched the higher limit or the upper limit of the same pattern, and we are starting to have this downward move. So I think the weekly time frame will be another candle, bearish candle. On the short time frame, of course, we might move a little bit higher to retrace and to form the higher wick and the upper wick on the weekly time frame before continuing the move lower. Maybe not. Maybe not, because the price action here is not really impulsive to the downside. So, change of plans. I think oil will continue the move higher. We are just looking for support. Because, you know, if you want to see what's the difference between the price action, which is a reversal price action, and the price action, which is a retracement, the power of the move. So if we're gonna say, let's say here, we moved lower, look at the upward move. It was really great. Very, little corrections, and even the retracements didn't interfere in the price zone. So that's the price zone of the first correction, that's the price zone of the other one, and that's the price zone of the third correction, and so on. So that's a strong upward trend, and this is how you know that this is not a retracement, it's an upward move. Okay, it's a swing higher. However, what we have here, it's not the same scenario. So we had a move lower, pretty good. We had a retracement, which was okay, acceptable and expectable. We moved another move lower, but we didn't really move so far. We started to have another retracement, which was a great one, and the price action started to interfere with the previous retracement. So two retracements in the same zone. I don't really see this as a downward trend. I'm seeing this as a retracement, and we will move higher, especially that today I do expect that we move again higher. So we will be having a third retracement interfering with the previous price action of the previous retracement. So to me, this whole thing is a retracement. Retrace. Okay, I'll not just continue the word, it's too much. Okay, so in this case, what we will be doing is we will be looking for the best entry point, because that's an upward move, right? So if we are expecting that this is only a retracement, so we are looking for somewhere to buy and to continue the move higher. Okay, so in this case, we will be looking for the nearest demand zone. And I would be really happy to see if there is a demand zone in confluence with the retracements on Fibonacci. So it's clear as day, we have a demand zone here. Why? Because it was pretty much a leg in or a move higher. So it's a rally, base, rally. There was some sort of demand here, high demand. Is this in confluence with the Fibonacci retracements? Yes, it's almost around the 50% retracement. So that's really great. What I will be expecting on the US oil during this week, from here, we might move a little higher, come back to the 50% retracement, off we go. It's not common that you will see me or, find me in an analysis session expecting more than one move. I mean, a move higher, then a move lower, and then a move higher, and so on. But sometimes technical analysis is just, on your side. So that's what I'm expecting on US oil. Okay, I think we'll have to wrap up this session with the Dow Jones. If you have any questions, please leave it in the comment section so that I will have a look on it when I'm done. Or just wait for an engulfing candle. If you mean a bullish engulfing candle, yes, but which time frame would you wait for it on? If you'll be waiting for it on the daily time frame, that might be good. Yeah, very, very good. But especially around here, the 50%. So engulfing candlesticks are really good if it's in your favor. So around the 50% and this demand zone, whenever you have an engulfing candle, just buy. Don't just buy an engulfing candle anywhere on the chart, because you still have one engulfing candle here. Price didn't go up. Why? Because it was not an interest or level of interest. Okay, so price action is really powerful. Candlesticks are really powerful when it comes, or when they come around areas you have previously set. Don't just open the chart, any engulfing candle you can just buy. So I mean, this around here, it was the lower limit of a price action or a pattern here, which is the symmetrical triangle. You had an engulfing candle, just buy, because it's price action around level of interest. Okay, where else do we have it? here, another engulfing candle. So we went, or we touched the upper limit of the same pattern, moved, sideways for 2 days, and then we had the engulfing, boom, went lower, and so on. So yes, you can use engulfing candles or any other classical, the candlestick patterns. However, when they come at areas of interest, when you want to see an engulfing candle around specific areas, okay? How about the Dow Jones? What is happening with the Dow Jones? The weekly candle is not good. It's bullish, but it's slightly bullish. I mean, we broke above resistance. That is a clear resistance. We went way higher and went way back again. We are still trading above resistance, which is now supposedly support. And I think we will be heading lower just for a retest. And I'm basically slightly bullish on the dollar index, on the Dow Jones, I'm sorry. So yeah, let me see if there is, oh, that's great. So the upward swing, the last upward swing, 38.20%. Retracement is just the previous resistance, which is the levels of 40,000 roughly. So I will be watching the Dow Jones around the levels of 40,000. I would really love to see, I would really love to see bullish price action around the 40,000, because it's not only a technical level, which is really important, it's also a psychological level, because markets are really silly. They love to see round numbers. We broke above 40,000 points on the Dow Jones. If, markets don't want to see the Dow Jones below the 40,000 again. This is silly. There are no reason for markets, to be in favor of round numbers, but it is just, psychological issue. So, and that's why the same level, which is the 40,000, previously we had a move lower. I mean, when we reached 40,000, people said, okay, 40,000 is good. It's an round number. Let's short. And that's exactly what happened. We had a move lower. But when we move above the 40,000, I wouldn't really love to see the Dow Jones trading below the 40,000 levels again. So during the day or during the week, I'll be waiting for a continued move lower. Maybe something like oil. A move lower, a move higher to retrace this upward move, another leg lower to 40,000, and another move higher. Not sure why I said this in, a soft and a low voice, but yeah, this is probably what I will be looking at. Guys, let me just explain to you something real quick and I'll wrap up this session. Everything that we do in this weekly analysis session is just not trying to give you trade opportunities, because believe me, there are days when I close the webinar, prices just definitely move in our way, and some other days, prices don't. I'm trying to give you a way on how to prepare for the week. If this happened, we are ready to do this. If the other thing happened, we are ready to do this, because we are in a stage of, time, the current period. I mean, there are geopolitical tensions there. There are some political tensions in the US. We have the global outage issue and things. So, I mean, the numbers, the US numbers, the retail data, and so on, everything can change in one day. So, what I'm trying to do in this weekly session is I want you to know how to think and how to prepare as per the technical analysis. If this happened, I'll do this. If this happened, I'll do this. I mean, the simplest example is on the dollar index. I just gave you two levels. If I broke, or if I see that the dollar breaks above the 104.45, I'm ready with my entry to buy the dollar. Another way around, if we broke below the 103.65, I'll continue to short. It's simple analysis. It's just getting your head straight and getting your homework done. I'm prepared to tackle the markets during the week and so on and so forth. Okay. price analysis is a good way of making group profits. Yeah, price action is the king. This is my personal opinion. I've gone through a lot of technical analysis methods. I believe that the pure basic price action is the best. Okay, guys, I think I'll have to wrap this up and call it a day. Thank you very, very much for joining me in today's weekly analysis webinar. I'll make sure that we will definitely meet again during the next week. That will be the 29th of July. So yeah, the next one will be the last one in month of July. And yeah, hopefully it will be a profitable week. Hopefully you will have all your trading profits in your bank account. If not, just stick to your price management or the risk management tools, and even if you lose some trades, you will be good and you'll be able to recover. Thank you very much, guys. I'll see you again next week. Please trade safe and stay safe.